Alright, so folks, I'm trying to come to you guys today with a little bit of a different video. This has a lot to do with the stock market. If you see me looking down, I got my paper right here with a lot of stuff that I've written down to discuss with you guys. But as you guys know, I like to invest in the stock market. I really, that's one of my passions other than hauling cars is investing. And it's something that I really I like to spend a lot of time doing, and spend a lot of time uh, researching. And guys, if I'm not looking directly at the camera, I'm sorry. I'm trying. This is I don't. If you guys can't tell, I don't normally talk to the camera, so this is a little out of the ordinary for me. And the camera's over here, and the screen's right here. So I keep looking over at the screen. I'm not trying to. But let's get back into this because, guys, one of the sayings in the stock market is from Warren Buffett is get fearful when people are greedy and get greedy when people are fearful. Well, right now, everybody's fearful of what's going on in the stock market. The prices have really plummeted, which we know why. And yes, there's a fairly substantial economic hit that's happening, but we're not going to stay down here at these lows for very long. When the stock market has kind of what they call like a waterfall drop, or the stock market goes off a cliff. Think of the stock market kind of like a bouncy ball. If you take a bouncy ball and you drop it off the side of the house, the ball's going to drop. It's going to hit the ground, which is our bottom end, and it's going to bounce. And it's not going to go all the way back up to where you dropped it from, but it's going to get pretty close up there. It's going to get 3/4 of the way back up there. So right now is a great time to invest. If you're putting money in the stock market right now, like me, you should be plowing. You should be plowing the money in as fast as possible. Every dollar you can, put it into the stock market. I mean, if you look at my long-term portfolio, I'm down like 19%. Now, options-wise, I've made a ton of money in this drop, and we'll go over that in another video. And one of the plays that I did was TLT. Again, we will explain the whole thing in another video, so I don't want to get sidetracked because I'm very good at that. I really want to discuss what's going on right now, and why, like for me, I'm putting as much as I possibly can into the stock market, because the saying in the stock market is we're in a bear market right now, and the saying is millionaires are made in bear markets. And right now we are officially, as of today, actually I think it was officially as of yesterday. No, it was today. The SPY closed into a bear market. So our bull market rally that we've had since 2009-ish, I think it was, we've officially closed out that bull market that we've had. We are now into a bear market. Not that we're in a recession, but we are into a bear market. And right now is the time to put money in, because you can get a lot of these stocks at a massive discount from what they were trading at a month and a half ago. So let's go over a couple of them. These are all stocks that I own. These are all stocks that are in my portfolio, and these are kind of some of the stocks that I am concentrating on based on how hard they've been hit. There's 4 that have been crushed that I'm piling money in, because I think in 10 years they're still going to be here. They're not going away. and there's one that hasn't really been crushed all that much percentage wise, but it's a $1 trillion company that we're getting a fairly good discount compared to what it was trading at a month ago. So let's just start from the top. Lowe's. Lowe's was the very first stock that I ever purchased when I started buying stocks, and I still have my original share. I will probably never sell that. I don't know why I'm attached to that stock, but I mean, it's just the first one I bought. So I will keep that one. But Lowe's right now is trading at $87 as of literally like 5 minutes before I did this video. I got these numbers. But Lowe's right now is trading at $87. That is $34.31 off of their highs a month ago. They have lost $28.28% of their. I mean, they're down 28.28%. For really the coronavirus. And yes, it's going to get worse, and yes, it's trading at 87 now, and it's going to go lower, but I'm buying it right now, and I will buy it next week, and I will buy it the week after that, and the week after that. All of these I will pile money into all of these every single week, every single time I can. Every single bonus that I get is going to go into these stocks, because in 10 years from now, they're going to be a lot higher than what they are right now. So, I mean, you're literally getting to go grocery shopping for anywhere between 28% and 70% less than what you could have bought groceries for a month ago. Think of it that way. You are buying stocks, but think of it as you're buying groceries. You now have a coupon that allows you to buy your milk for 43.35% less, which is what's happening to Ford. Ford right now is trading at $5.28. It only costs you to get one full option contract worth of Ford. It's only going to cost you $528. That's 100 shares for $528. Ford pays 15 cents per share, or so right now that is a 9.58% dividend. So as long as Ford doesn't cut their dividends, you are guaranteed right now, for every dollar you put in for the rest of your life, you are guaranteed a 9.58% return on your money year after year after year after year, just on their dividend, if their stock doesn't move at all. So think about that for just a second. When your normal investments in the stock market, they try to say an average of 8 to 12%, and if the price of their stock never moves, you're guaranteed a 9.58% return on your money if the stock does nothing. Ford's not going away. Ford has screwed some things up recently. So they not only have the virus, but they have some other sideline things going on that has caused their stock to drop the way it has. But even still, Ford in 10 years is still going to be making cars. Ford's not going away. The next one on this list is Carnival Cruise Lines. The virus is killing them. It is killing what their main source of income is, because people don't want to catch the virus. Well, if we get this virus turned around, right now we have an oil battle going on where the price of oil has plummeted. Think about that for a second. Pretty much the second biggest cost to cruise lines is their fuel. And if right now we can buy fuel really cheap compared to what it was literally last week, you're cutting a huge portion out of their cost. So if they can get their numbers back up for people taking cruises because of getting the virus under control and oil prices are cheap the way they are, look, they are going to become extremely profitable. And not for a very long period of time, but for the short period of time, they're a great investment. Carnival Cruise Lines is trading at $15.35. That is $31.81 less than what they were 1 to 3 months ago. They are down 67.45%. Think about that. You drop that ball, and it goes down 67.45%, but it's going to come back up to 55%. So you can almost immediately, probably within a year and a half, make 55% on your investment, because this stock is going to bounce back. And right now it's giving an 8.33% yield on its dividend. It's a great dividend stock as well. The next one directly next to that, still connected to the same thing, I invest in both of them, is Royal Caribbean Cruise Lines. They are trading now at $31.21. That is down $94.41. They have almost lost $100 a share in a month to 3 months. In the last quarter, they're down 75.16% in that time frame. They don't really have much of a... Well, no, they have a good dividend. So I was looking at the next one down. They have a good dividend. It's 6% right now. So not only are you probably going to get 50 to 60% return on your money by the stock rebounding, but you're also getting a guaranteed 6.04% return on your money. That's a big percentage over a long 10, 15, 20, 30 year investment cycle. No one dropped the atomic bomb. There's no terrorist attack on any of these stocks, but especially Carnival Cruise Lines and Royal Caribbean. And here's one that really has made a majority of its loss this week. This week alone has absolutely crippled this stock. But I want you to think really hard about this stock when I give you the name, because nothing about the company has changed other than their theme parks aren't going to be as occupied for probably the next 3 to 6 months, and that's Disney. Disney's stock is down to $89.35. They have lost $58.08 in the last 1 to 3 months, but really most of that is in the last week. And a lot of that happened today when they said they were talking about closing down their theme parks. I think they did close down the one in California. So they're down 39.39%. They don't really have a dividend. I mean, it's 1.58%. Don't invest in Disney for the dividend. But really, are people going to stop going to their parks completely for the rest of eternity? No. Are people going to stop watching Disney movies? No. Are they going to continue producing Disney movies? Yes. So the core of their company hasn't changed, but you can get an almost 40% discount buying them. I mean, think about if you were to go to Disney World and you walk up to the gate and they're like, oh, by the way, today we're issuing their ticket for 40% less. Would you not go? No, you would be ecstatic to save 40% on the ticket to go into Disneyland or Disney World, and now you're getting that same 40% discount to have a ticket of money that is going to grow over the expanse of time to when you retire. The next one, which they haven't always been a great investment. This is more of a shorter term investment for me. I'm not in this one for the long haul. I'm probably in it for, I would say, 6 months to a year, and a lot of it's because of the loss that it has incurred, and because I'm pretty certain the government is going to step in and really bail them out, which is going to spike their stock. And as soon as that happens, I'm out. This is not one that I'm in for a long time. But UAL, that is United Airlines, they're down to $35.35 as of just 10 minutes ago. That's down $52.85. They've lost 59.92%, and that really is, we know the reason, because of world travel. And now a lot of businesses are going to be pulling away from allowing their employees to travel. They're going to cut any non-essential airline travel out, which is going to really hurt the stock. But I do think that Trump and the Congress is going to step in and really bail these type of companies out. So this is the one that I picked, United Airlines, mostly because of when they get the bailout. I think their stock is going to spike, and as soon as it does, look, I'm out. I'm going to take my money. I'm going to run. I'm going to invest it into Ford, into Carnival Cruise Lines, into Disney, probably a lot into Disney, because I really like them. But the next one is that $1 trillion company that I was telling you about, and we all know it and most of us use it, is Amazon. It is trading down to $1,633 a share. That is a huge price per share to buy, but it is down not a huge percentage per se, but a huge dollar figure. Just maybe like 4 or 5 months ago, it was trading over $2,000 a share. But it has lost $517.90 in the last month. That's $24.08% loss. Has really anything changed with Amazon? No. Stuff coming from China is going to slow down, which is going to hurt their business. I think Amazon actually has more room to fall, but I'm still going to buy into Amazon every single week, because I believe that no matter what the stock market is doing, if you are investing this isn't trading, this is investing. If you're investing for the long haul, you have to picture what that stock's going to do in 10 years. Don't buy stocks based on the stock. You buy companies, and by buying companies, it doesn't matter what it's trading at today, because if you believe in the company, you believe that it is going to trade a lot higher in another 4, 6, 8, 10 years down the road. And the last one that I'm putting a lot of money into, and that's because they had the pretty much, I would say they're the second largest drop percentage wise, but they have an amazing dividend. Now I think their dividend's going to get cut. So this number I don't think is going to stay the same for very long because of what's going on, but is Occidental Petroleum, OXY. It is trading down at 12.25 or $12.25 a share. It is down $29.90 for a loss of 70.94%. But they have a dividend of 20, because of the loss. Their dividend is 22.04% right now. So right now, if the government steps in and really helps them out so they don't drop their dividend, which I'm pretty sure they probably will, but if they don't, you are guaranteeing yourself, as long as you never sell the stock, a 22.04% return on your money for the rest of your life, unless the dividend changes. But the likelihood of them changing it is pretty up there. In my opinion, I bet you that goes down to 10%, but 10% is still much better than what you can get out of a savings account. So guys, that's what I have right now. I'm investing. I'm excited. I am piling money into the stock market right now, as much as I possibly can. Like I said, millionaires are made in bear markets. So we are in a bear market right now. Bear market means the market's dropping. So look, buy the discount. Right now, the stock market is giving you a coupon to be able to buy what everybody was valuing the stocks at 3 months ago. It's giving you a discount. It's going to go back up there. Look, something to think about. The stock market rebounds 100% of its losses 100% of the time. So if that's the case, buy the discount. Be a contrarian investor. Invest the opposite way of what the market's doing. When the market's at its highs, pull money out. When the market's at its lows, put money in. And you don't know when the low is. So look, just pile money in. You're going to be like me. If you're like me, you're going to look at your portfolio and it's dropped. It's dropped a lot, which sucks. But at the end of the day, I know it's coming back. So I have no fear in my heart of what's going on right now. Yeah, my portfolio is, it went off a cliff. It's just plummeting. But if I invest in these markets now, in 10 years from now, it's just, my portfolio is going to look like it went down, had a little step, and it's way back up here. I'd rather get as much as I can down here, as low as possible, so that way I have more meat on the bone when it's back up here at its highs. So guys, that's all I have for you today. Please smash that like button, subscribe to the channel. I know this is different than the normal car hauling vlogs, but look, I'm trying to help you with your finances. I'm trying to help you in the long haul. Get into car hauling, make the money, put that money to work for you, so that way you don't have to work your entire life away. Please, if you like investing, or if this sounds at all fun to you, it doesn't cost you a dime, join Robinhood. That's one of the main companies I use. I love Robinhood. The link's in the description below. Just hit that little arrow on the side of underneath the video, and you'll see the Robinhood link. Click on that. Join Robinhood. It's free. You don't even have to put a penny into it, and you will get a free stock. So guys, please smash that like button. If you're not already a subscriber of my channel, subscribe and hit the little bell so it gives you alerts of when I post videos. Guys, thank you very much. I appreciate you watching my videos, and I'm out. I'll see you on the next one.